Alright, what's going on, y'all? Today is February the 8th. Gonna review the trades for the day. Had a decent day, just above 300 in the green. So let's go ahead and get started. I'm trying to be better at transitioning these scenes so I don't miss anything. So let's start at the beginning. So Overstock was a stock that came up in the Boiler Room Trading chat. You can pay $30 a month on their site to get access to their members only chat room. And somebody had mentioned Overstock. I've known Overstock for a while, watched it for a while. I know that it's a very like Bitcoin driven stock as of recently. So new Bitcoin price is going up. Thought it was probably in a bullish phase. Went to it first thing in the morning. Oh gosh, see, this is what I'm talking about. Gotta switch. There we go. We'll get this right. Was right about here. Dip occurred. All the basic indicators look great. RSI was low. When the RSI is under 30, typically means the stock is oversold. Price tends to come up. When it's above 70, typically overbought. Price tends to come down. MACD looked good as well. Entered in, wrote it for a quick buck. I could have ridden it, it looks like, for a couple, but I tend to minimize my risk, and if I make $100, I get out. So that is what I did, I believe. Let's switch back. Yep, wrote it for a buck. Made a quick, 80 or $90, and got off. Next trade was Snap. That's one that came up in the scanner. So the scanner that I use is in the Boiler Room Trading's YouTube channel. They post this live scanner every day. This is not the one from today, but this is an example of what it looks like. You can see my cursor, right? Yeah, so this reversal scanner right here. Bottom bounces are what I look for. V5 or V8. V8s just are a little stronger of a bottom bounce, but those are what I look for. Again, this is available for free. Boiler Room Trading's YouTube channel. There's only been like one day since I've been trading they haven't posted it, and it was because of like technical issues. They typically post this every day. So yeah, let's go look at Snap on here. Gosh, I gotta really better about switching back and forth. Snap. Snap came on the scanner, and I wasn't in love with it, and bought in. It dipped a bit, and then just traded sideways all day. So took a loss on that. I should have known better. I wasn't feeling super great about it, but decided to go for it. Sometimes that's the way it works. Next one looks like this one was so little I didn't even post it. I mean, you can see I made I think $2 or something on it. Goose. Yeah, I literally made $2 on it, so I didn't even put it on my board. I think that was just one that I saw on my personal scanner. So let's go back to Thinkorswim. When there's nothing popping up on the reversal scanners and I'm bored, just trying to look at things to analyze, I'll typically go into the Thinkorswim scanner, put in the filters of stock being between $15 and $200, and then the RSI scan study, but with a link of 14 and average type is less than 30 in the last 30 minutes. These, my success rate on stocks in here are not as good as the ones from the scanner, but I have had some success finding stocks in here using this scan. If you go to Boiler Room Trading's YouTube channel, you will find a ton of videos on how to find good stocks with free resources like Finviz and other online scanners. So definitely would look into that. What was next? MKSI was a great one. This one actually I did find on my own, but then it ended up popping up on the reversal scanner. That does happen to me sometimes where I'll find it before it pops up on the reversal scanner. Let's go see. I gotta switch. MKSI. Yep, it was here. I found it before it popped on the reversal scanner, but you can see there's a pattern. It's a pretty simple pattern here where dips occur, RSI is under 30, and you see a cross on the MACD, blue line above the yellow. This is really simple stuff. I get a lot of shit sometimes for bringing these up, but sometimes it's, like I said, the simplest things that work. So that was MKSI. What was next? CAH was a tiny victory. Oh, CAH, I believe I found on my own. No. CAH did come up in the scanner. It was just taking too long, and I'd spent a ton of money on CCI, which is one I found on my own. So I just basically got out of this position, breaking even. CCI, was that a loss? No. CCI was no, it was a loss. CCI was a loss. So CCI was one I found on my own. Let's go take a look at that. Damn, I do remember being pretty confident about this one. Right, so CCI was down here. Wow, it did come back. Oh my gosh. Sometimes this happens where if I would have just been more patient, I would have made a ton of money. So, and this is a great example of someone who's going to swing trade instead of day trade, and how much better that can be sometimes. So CCI, I bought in at 158.7, and this was at 10:43 a.m. So let's go there. 10:43 is right here. And then this dip occurred, and obviously just decided to cut my losses and get out. But if I would have been patient and held it till the end of the day, it looks like it came up all the way to 160, and that would have been a nice $300 win for me. So sometimes I'm learning that you got to be patient with these higher price stocks, and give them time to come back. So, and that's a great example of a swing trade. Like if you don't have the ability to day trade, you could have done the same analysis that I did, bought this stock, and then you could hold it to tomorrow, and then tomorrow first thing in the morning sell it. And look, even after hours, it's all the way up to 162. So that would have been a huge win for somebody swing trading, regardless of how much money you put into it. Even if you only put in, a few $100. What is next? Go back to the browser. Damn, that sucks. CCI. I was confident in it, and then it ended up being a win. I just wasn't patient enough. Peloton, I took a quick ride on. Oh my god, I do this all the time where it doesn't immediately do what I want and I freak out and get out. But that was a baby win, but I don't even think I recorded that one on my board either. It was so small. Actually, maybe I did. I went and checked out Overstock again and rode it for another little ride here. Something similar. I'm not going to go look at it, but just a little dip that I saw, and I was bored, so I tried to take a ride on it. HOTH came up on the scanner, another small ride. Same with the CRB. And that's basically my strategy, guys. I look for stocks on this scanner right here that take bottom bounces. I look at very, very basic studies and sort of gut instincts on the news that's caused it, and I enter and then I exit when I've made a little bit of money. I did have a guy comment a bunch of times talking about how I'm not bringing up the risks of this enough, but I think I've made it pretty clear that I'm not claiming to be an expert. I'm just sort of sharing what I'm doing, and I don't think this is all that risky the way that I'm doing it, because when I buy into a stock, it may look scary. Like you may look at you might look at this CCI purchase, right? I mean, that's $15,000 of stock I now own. But you have to remember that CCI, the lower a stock price is, the easier it is to make these huge instantaneous price drops. CCI, once you deal with stocks that are especially over 100, but I'd say even over $30, they're not going to do these crazy price movements up and down. I mean, things like GameStop will right now because of the insane volume going on. But if this stock, that I own, yes, I own it, and I did put $15,000 into it. If it starts to come down and it's not doing what I want to do, I click the sell button and I get out immediately. I typically, what I do is when I buy in, my goal is to make $100, and I'm watching it for that move up $1. And once it gets there, I'll sell unless I feel really good about it, and then I may have some more patience with it. And ride it out a little longer. And then in my mind, I'll always have a point of when I'm going to get out. So you know, maybe this stock may went up a little bit, and then I'll be like, okay, the point where I sell is this. Maybe it goes up a little more, and then I'll increase my point, and I'm like, okay, if it gets here, I sell now. And then I just keep doing that the more it rises. And I'm watching it like a hawk, like I'm waiting. Because when you click that buy or sell market button, it's done. I mean, there might be like a second delay, but that's why I don't think it's risky. And the second reason I don't think it's risky is because as a day trader, you don't own positions at the end of the day. All your money is cash at the end of the day. So that worry that a lot of people have of, you know, I don't know, crazy things are happening right now. The stock market might crash. Day traders don't have that risk because at the end of the day, we're dealing with all cash. We close the day without having any positions in our portfolio. So I don't think it's as risky as, I mean, I think you could obviously make it risky doing things out of your comfort level, or maybe using too much of a portion of your money in one trade. But I think there are a lot of ways you can make it very safe and sustainable. I'm going to end it there, guys, but guys and girls, sorry. I'm going to post this now, and I will see you all tomorrow.